All right, welcome to Talking Investing. I am Tom, and as always, this is not financial advice. Today, I want to talk about RIOT Blockchain, stock ticker RIOT. RIOT filed their 10Q quarterly report with the SEC yesterday for the period ended June 30th, 2022. So I want to go through that report. I want to go through the press release that they put out with that. There is a monumental amount of information in the press release and in the financial statements. I want to distill that down to the stuff that I think is important because there's a lot of extraneous information in there, in my opinion. So we talk about Bitcoin and Bitcoin miners all the time on this channel. If that's content that you're interested in, please remember to subscribe to the channel and hit the notification bell. Also, if everybody could please smash the like button, that helps this video out a lot, it helps the channel out a lot, and it helps get this video out to more people. I have never had 300 likes on a video, so I want to try for 300 likes today on this video. So let's see if we can get there. Thanks for your help. Okay, let's talk about RIOT Blockchain. Okay, so we're pretty early in the trading day today. Bitcoin is down a little bit, and RIOT is down about 8% today on the day. So that is fairly consistent with the rest of the Bitcoin miners. So I don't think people are selling the news on this quarterly report and their press release. I think most of this downward pressure is consistent with the rest of the Bitcoin miners. So I think this report was received fairly neutral by the market. So just a few days ago, RIOT was up over $10. They're now a little bit under $9. So I want to go straight to their press release and go through some of the highlights. Then we'll look at their financial statements and then we'll look at their chart. Before earnings season started, I said that I will be looking for three things in these quarterly reports. Number one, how did these companies manage their direct cost, their cost per Bitcoin, and that is their cash cost. So I am not including depreciation. We're trying to figure out if these companies are making money or not on a cash basis. Is it worth mining the next Bitcoin? So number one, how did they control their costs on their Bitcoin? Number two, how did they control their overhead costs? Because we are in a period where we're 8 or 9 months into a bear market. Now we're a little bit into a relief rally right now, but the entire second quarter was really probably the most vicious part of this bear market in cryptocurrency and in Bitcoin. So it was important to me that companies were controlling their overhead in this period of time. We don't want to see companies scaling up big time and spending extra money when we're so deep into a bear market. So that is the second thing. The third thing I said I would be looking for is liquidity. How did the company manage its liquidity in the quarter? Have they maintained an adequate amount of liquidity to get through whatever this bear market is? And, like I said, we're having a little rally right now, so it may be over. There may be more ahead, but we want to make sure these companies have solid liquidity so that they can get to where they're going. With that in mind, let's start with their press release. Okay, RIOT reports second quarter 2022 financial results, current operational and financial highlights. RIOT reports Q2 results with $72.9 million in total revenue, 1,395 Bitcoin mined. So we're going to take a look at how the Q2 Bitcoin mining compared to the Q1 Bitcoin mining. Now, RIOT has started a couple of new lines of business over the last 2 quarters, so there's a bunch of revenue in there that is not Bitcoin mining revenue. So I am going to be specifically looking at the Bitcoin mining revenue. They have a hosting service and they have an engineering service, both of which are generating significant revenue. However, neither of which is generating any gross profit margin at all. In fact, they're both losing money even from a gross profit standpoint. So I really don't want to consider those two segments of the business yet. Perhaps they will mature over time and add to the gross profit. Right now, they need to focus on putting all of their energy and their dollars into the plan that they have to grow their exahash rate and to grow their infrastructure for the Bitcoin mining, because this is a Bitcoin mining company. Okay, so I'm going to skip down to second quarter 2022 and recent operational highlights. As of June 30th, 2022, the company had deployed a fleet of 44,720 ASIC miners with a hash rate capacity of 4.4 exahash. So their hash rate has been fairly stagnant over the summer, June, July, August, and that has been intentional. When Bitcoin hit these very low numbers, RIOT has taken its opportunity to move a lot of their machines around from other locations that were not as cost effective, where their energy price was higher, and some of those were co-host locations. They now have enough of their own facilities to host all of their Bitcoin miners going forward. When they're done building out their infrastructure, they will have more capacity for Bitcoin mining than any other Bitcoin miner probably in the world. Okay, subsequent to June 30th, 2022, receiving an additional 9,316 new S19j Pros and deploying 4,320 S19j Pros in RIOT's immersion cooling buildings, with an additional 7,200 miners staged for deployment. So upon deployment of the stage miners, miners, Riot expects to have a total of 47,511 miners deployed with a hash rate capacity of approximately 4.9 exahash. So that is going to represent some growth. That's a half an exahash over what sounds like they're already staged. So I would expect these maybe to be installed by the end of August. So I would say going into September, maybe they're going to be at 4.9 exahash, so very near 5 exahash. So they have been on track for growth all year. Again, the last couple of months, they were a little bit sideways, but it looks like they're picking back up. And they go through their plans. They still plan to be at 12.5 exahash by Q1 of 2023. So that is down from 12.8 exahash, which they have been projecting for the last year and a half. So that's virtually the same number. So they've been extremely consistent for about the last year and a half as to where they're headed towards in Q1 of 2023. So 12.5 exahash is what they're headed for. It looks like they're going to get to just about 5 sometime near the end of August. Okay, then they say they continue to make significant progress on the company's 400 megawatt expansion to its Whinstone facility. So they have a 400 megawatt expansion going there. Later, they say they began development of the company's previously announced 265 acre, 1 gigawatt expansion. So that is 1.4 gigawatts of expansion. That alone is significantly more than anybody has in infrastructure for mining capacity, in addition to what they already have up and running. So lastly, they let you know that their business in New York is done, so no more miners in New York for Riot. Okay, so just to reiterate, hash rate growth. By Q1 2023, Riot anticipates a total self-mining hash rate capacity of approximately 12.5 exahash. So importantly, they did use their at-the-market offering. So a lot of people are not going to like this. So I'm not going to get too deep into this. If you guys want to know more about this, I can do an entire separate video on this. This is a conversation I could talk about for a half an hour just on its own. So I don't want to dive too deeply, but I'm just going to give you my overall opinion that this was absolutely necessary. It was absolutely foreseen. They needed this money. Everybody knew they needed this money, so they had the chance to raise this either through debt or equity. I'm very much against debt at this stage if it can be avoided for the Bitcoin miners. So yes, they diluted their stock quite a bit and they raised quite a bit of cash in the second quarter. But I was expecting that. That met my expectation. And again, it's absolutely the only way. They're trying to gear up to 12.5 exahash. So that money has to come from somewhere. Yes, we all would have loved for Riot to still be trading at $40 a share, so they could have done dilution at $40 a share. Well, they had to do their dilution at just under $9 a share. It was not ideal, but it was not the bottom, and it's what they had to do. And ultimately, I don't think it negatively impacts their stock's ability to grow in the long term, because you'll see from a market cap standpoint, and I'm not going to do the analysis, but instead of looking at outstanding shares and share price, if you look at market cap, even after all these shares have been issued, Riot's market cap is down drastically, somewhere still in the neighborhood of 80%. So they still have the ability to recover to get back to where they were. Just from a market cap standpoint, their stock price could still pull maybe a double or a triple or a quadruple. So there's lots of room for growth, and that's just to get back to where they were when they were a much, much smaller company. So they did raise $270 million with their at-the-market offering. They issued 30.6 million shares. That was about a 20% stock dilution. So again, that is significant, but that was exactly anticipated in my opinion. So I'm going to move on from that. And again, if you guys want to know more about that, I can do a separate video on that. Okay, another thing that affected their income statement, and this is why I'm not spending a lot of time on their income statement as well, because I would say 90% of the activity on their income statement is non-cash activity, and it is not representative of their operations either to this point or going forward. They did have a Goodwill impairment. They wrote off $349.1 million. Now, they said that they had an independent valuation done, but, I don't know how much they spent on that, but the people decided that the value of that was zero. So, I probably could have told them that for free. Like I said, these are gigantic numbers. They're non-cash numbers. They're non-operational numbers, and they really have nothing to do with the success or failure of the company going forward. So let's just quickly take a look at their balance sheet. This goes to liquidity. So one of the 3 things I talked about was I want to make sure these companies maintained their liquidity. So you're going to see they have, as of June 30th, $270 million in cash. That's roughly what they raised from their at-the-market offering. So that still sits in cash. Now, they are going to need that cash. If you go to this schedule in footnote 8 of their financial statements, you'll see they still have open purchase orders committed on the machines that they have purchased that are not yet delivered of $110 million. They also have to spend money on the infrastructure. So that's why when I say I see $270 million here, that gives me comfort because I know they're going to need the money. So although it came at the cost of dilution, their liquidity is excellent. In addition to that, they have $126,000 in cryptocurrency. That's actually more now because the price of Bitcoin has gone up since these financial statements. So if we look at their overall big picture, their current assets versus their current liabilities, they're at about a 5-to-1 ratio, which is excellent. Their total assets versus their total liabilities, they have $1.4 billion in assets and $147 million in liabilities, long-term and short-term. So that's about a 10-to-1 ratio, assets to liabilities. From a liquidity standpoint, I'm very pleased with what they did this quarter. Okay, so let's take a quick look at their income statement, because here you're going to see they now have 3 separate distinct segments of their business: mining, data center hosting, and engineering. And these other 2 segments are not insignificant. And for those 2 lines of services last year, that was $2.8 million. This year, it's $25 million. So the real numbers to compare are the mining numbers of $31 million in the same 3 months of 2021 versus $46 million in this 3 months of 2022. That's the 3 months ended June 30th, 2022. This data center hosting is helping them facilitate their scaling up to 12.5 self-mined exahash, in my opinion. However, it is not a profit center. You'll see it's losing money from scratch. Their engineering revenue was $16.9 million. If we look down here, their engineering costs were $15.1 million. So quickly, I just want to show you their cost per Bitcoin. Last quarter, their cost per Bitcoin was $13,590. And if we look at a chart of all of the companies, that puts them right here, very close, to the top of the list. However, you see this quarter, they reduced their cost of mining per Bitcoin. So they reduced it to $11,316. And that is a combination of the fact that their energy costs are lower in Texas. They're not paying any more co-hosting fees, as well as the fact that they're getting a credit for energy when they contribute back to the grid. So that is helping reduce their cost per Bitcoin. Then if we go to overhead, you'll see total overhead from Q1 to Q2 went from $10.9 million to $10.7 million. Now I backed out non-cash compensation because, again, that is not a cash item. Cash overhead went from $7.8 million to $6.9 million, just under $7 million. So they actually reduced their overhead from Q1 to Q2. So that was a big win. So to me, in the 3 things that I said that I was going to look at, I like all 3 things that I see. So you'll see from their highs in February of 2021 until where they're trading right now, they are still down 88%. So that is a massive pullback. Now, some portion of that is due to dilution, but not a significant portion of that. Most of that is due to a pullback in their stock. I want to go to another number because things were a little bit inflated back here in January and February of 2021. So if I go all the way down to where they were in their November highs, they're still down about 79% from their 52-week high back in November of 2021. If we go back to November of 2021, you're going to see their market cap was $4 billion. So it doesn't matter how many shares of stock they have. Their market cap has gone from $4 billion down to about $1.3 billion. So that's almost a quadruple to get back to where they were in their November highs. I am not even going to count the nearly $6 billion market cap they had back last February because I think that was part of a bubble. We'll see where they go from here. I liked this report. I think this was a positive report. Please remember, this is not financial advice, and do your own due diligence. I'm not recommending this stock. I'm not recommending you buy it. I'm not recommending you sell it. You've got to do your own due diligence, but that is my look. Those are my thoughts on what Riot did in the second quarter of 2022. So thanks so much for watching, and we will see you in the next video.